Okay, in this video I want to talk about rules as tangibly as possible. So here you see different categories of rules. I'll go over these, but first I want to mention something that's a little bit intangible and then show you something else, and then we'll get into it. So here, the Merriam-Webster Dictionary defines anarchy as a situation of confusion and wild behavior in which the people in a country, group, organization, community, etc. are not controlled by rules or laws. Okay, so imagine 7,000 or 10,000 different accountants all creating XBRL-based reports that are supposed to be readable by a machine, and how that would work if there were no rules. So imagine, so this is the XBRL Cloud Edgar dashboard. What it does is it shows all the rule violations of these SEC filings that are XBRL-based, based on the rules that XBRL Cloud has, or created by someone else like XBRL US or myself or whatever. So imagine that none of these rules existed. What would the dashboard look like? It would be all green because there are no rules to verify things against. So, they wouldn't be correct, but they'd all be green. So if you add a category of rule, for example, XBRL technical syntax, you get this column covered, and here we see there's one error, but most people are not making mistakes. I'm not sure why Wakiva has an error. They're generally pretty good about XBRL rules. And the reason that this is so high, people, basically 99.9+% of people get this right, is because there are machine readable rules that software vendors use that are published by XBRL International, and the rules help people get their XBRL technical syntax right. But you also have other things that you have to get right. The SEC publishes some rules, and then there are other rules. That's what I want to talk about, these other rules that are basically accounting rules or logic rules or whatever. So again, we covered XBRL syntax rules. There are no errors. That's why this is green. Model structure. So model structure relates to, so here's your income statement. So imagine that someone took this report element, which is a member, and used it down here. So what in XBRL prevents that from happening? The answer is nothing. So I created a set of rules and put it in the form of a matrix to view. This says that a member, the parent member, must only have other members associated with it. And that is what is happening in the Microsoft report. In fact, Microsoft, there's none of the orange. These are illogical or errors. The yellow are best practices, and Microsoft is following all best practices, and they have not made any errors in their report. So again, this relates to the organization of these little categories of elements that many people erroneously call tags, which gets them into trouble. And that's what that does. The Edgar file manual rules we're not covering with this application. People tend to understand those for the most part. I'm going to skip that. So the type class relations, those are all about. So imagine, let's go to the balance sheet. Imagine that someone used this concept, goodwill, which is a non-current asset, as a part of total current assets, which it's not a part of total current assets. But let's pretend someone used that. So that's a mistake. So XBRL does not provide anything that says that that's not illegal. So people creating taxonomies have to create rules, generally something like a general special rule that states that goodwill is not a part of current assets. It's a part of non-current assets. That's what these rules are all about. You can see this better in the model structure. So basically, goodwill is a child of assets. It's not a child of current assets, but if someone put it here, the application would detect that error and inform the user so that they could fix the error. That's what model structure does. So the fundamental accounting concepts, there are relations within financial reports. So for example, everyone knows that assets must equal liabilities and equity. And here, assets equals liabilities and equity. So that fundamental relationship is sound. There are about, 20 of these relationships. It depends on exactly how a company reports as to whether they have this type of, which relationships apply to their reporting style. But here you can see that, where is it? Assets equals liabilities and equity, and sure enough, these were found, and they're found to be consistent in the Microsoft report. So that's what those are about. So the model, the disclosure mechanics rules, let's go to inventory. So here you have a disclosure of inventory components of inventory. Okay, so you can tell by looking at this that it is a roll-up. You have some items that roll up to a total. You know that there should be a concept inventory net or some other concept that represents total inventory. You know that if you have this level 4 detailed disclosure, you're probably going to have a level 3 text block, and it's going to be of a certain specific text block concept name and other such relationships with policies and other items. So these are all represented in machine readable form using rules. The disclosure, this is disclosure inventory. I gave it a name, inventory net roll up. It's going to be a disclosure as opposed to a statement or as opposed to a document information section of the report. It's going to be a roll up. It can use this concept or these alternative concepts. The text block that can be used if this disclosure exists is this text block. Alternatively, this can be used. And then you get into policies and other information, but I'm going to wrap this up. So that's what this category of disclosures, of rules, relates to. So here, reporting checklist, this set of rules checks to make sure that the pieces of the report that are supposed to exist do exist. So for example, a balance sheet is required in the report, and they were able to find the balance sheet. Income statement, same thing, it's a required disclosure. Cash flow statement was found. So here you have a disclosure, required disclosure, nature of operations. So if we click on this, we can go and see what the rules are. It's a required disclosure, and you're supposed to use one of these concepts, nature of operations, or this one, this one, this one, this one, this one. So basically, given all of these concepts, either A, Microsoft made a mistake and they did not provide this disclosure, which I find that's not very likely, or number two, I might have a rule that is missing that specifies a concept that Microsoft did use that is allowed, but I didn't detect it because I didn't have a rule. So that's what these disclosure checklists, the reporting checklist rules work. So for example, not only do you have required disclosures, but if you find the line item inventory, if the line item exists, so there's the concept, then this disclosure is going to be required. So I'm not going to get into any more detail on this. I'm going to stop there for now, but I just wanted to give you a general sense of how rules worked within a report to prevent anarchy, or basically to make sure that everything is rock solid and created correctly.